Hey, good evening or good morning, guys, I should say. Creativity 202 check in for August 20th, 2023. Just a quick check in for me. I'm back from open heart surgery, had a successful valve replacement. Reminder, when your body gives you a wake up call, don't hit the snooze button. Get up and take care of it. It doesn't get better by waiting. Doesn't work that way. But things are going well. I've been home for a week. 20 pounds later, energy levels better, walking an hour a day. So all is good. Jeff, how are things?
Things are great. I got probably 9 or 10 hours of sleep last night. So yesterday I would have told you how tired and low energy I was. But yeah, a good night's sleep and a cup of coffee for a lot of things. So doing great.
Very cool. And Greg, how are we doing out there?
Doing well. Got a lot of things going on, and life is certainly keeping me busy. But happy to be here. Things are great.
Good. Well, I'm gonna go ahead and hit the tones, Jeff, and just turn it right over to you. If you're about ready to go, we'll get this show on the road. So here we let's see if it's gonna work. Here we go. And we're up, sir.
All right. Well, like I said, this is my busiest time of the year. So just a day or two ago, I would have complained about how tired I was and had no energy. But it started raining here in Utah. Talk about pattern recognition. I have a slide, but it's on my phone. I don't have it prepared, but I took a picture yesterday morning during our morning briefing of the weather pattern of the North American continent. And it was so unique. I've never seen that in my 30 plus year aviation career, where there's a huge drought in the center of the country and there's a big donut there.
Yeah.
And it's getting rain everywhere. So all of the western states are getting rain, which means fire activity is slowing down, which is good for us because we get to rest a bit. And I'm on lesson 24. I actually continued the lessons throughout the weeks, but I thought we would probably just stay where we left off and pick up from there.
Yeah.
The interesting thing is, I had a plan 3 weeks ago for this lesson, but after 3 weeks have passed, the things that I thought were important have been surpassed by other things. So I've prepared something totally different, but the trader's exercise of dynamic framing, the idea that I don't know why I didn't get this months ago, but the idea that we're building our own narrative when we make our trade frame. So if we all looked at the same symbol on the same time frame and we framed it independently, when we got together, our narratives would probably be different. So that was kind of an aha moment for me. And the biggest aha moment was the fact, I've lamented this before, like as a higher time frame trader, I thought, why not just, the market's not doing anything. It's just going sideways. So just go do something fun, right? Go do something else, go do some other kind of work. And then the realization that a low time frame trader can make a very fine living inside that normal plus or minus one ATR channel, because that's 5 MMRBs or something on a 3-minute chart. So that was a big aha moment. And then some of my own personal stuff. We have our Tortoise Traders Accountability Group that checks in with each other via email on Friday and then meets on Saturday. And everybody has the same story. They've been struggling really hard. It's been difficult for people in the last couple of weeks, and I'm no exception. I think my account, I'm down about 6R in the last 2 weeks, but there's nothing wrong with my system or the market, or really me. It's just the choices that I made. So I put on a trade in the morning, I put my stop in, and then I go to work and I fly all day and I get a 1 hour loss. that was the plan, right? It wasn't the hope, but that's where I plan to get out. So that's always been a challenge for me this time of year, trading and flying. Because if you're not really I'm not really trading if I'm not watching the trade and managing it from its inception to its end. So when you leave them alone like that, it's like leaving the children in the house, and you can't be surprised by what happens when you're gone, right? So that led me to the realization that I made a couple of notes here. The trader's mindset is what I really want to develop. All the rest of it is just a set of tools that you use at certain times. So I've switched my focus from the tools, which are very important. You need to know when and how to use them, to the mindset of the craftsman, because that's really where the magic happens, right? You can give the tools to someone who don't know how to use them and they don't work. But if you're a craftsman, you can improvise with, you have your own tools that you prefer in your box. But if you end up somewhere without your tools, you can use other people's tools and you can still make really good things. So it's not about predicting or being perfect, just doing the work the best I can with the tools I have, and know when to use each tool. And so in my assessment of the last couple of weeks, something came up, the perfect entry versus just get in. So in the assessment, I'm criticizing myself because I'm 2 bars late on the entry. And then I thought, really? I mean, yes, that's actually true, but should I skip that trade because I'm 2 bars late? Or once I know where my stop has to be, which is the peak of the RL10, why not just get in? Maybe you get in a bar early if you're willing to accept that risk. And your MMRB, Luke and I have had discussions about this. To me, my MMRB will be from the peak of the RL10, which is where the PSAR is going to be, maybe there already, to my entry. That distance is actually my initial risk, because that's the point where the trade will be proven invalid. So that led me to my last point, which was on position sizing. And looking at all my trades, most of them would have worked with a bigger position size. I was using about a R3 because I thought that was a good size to use. But actually, the market got a little more volatile than it had been on the way up. So a larger stop would have been better. So I thought about the idea of, it's the same way you've been talking about position sizing. Maybe the MMRB, the R10 or the R6, whatever we decide to use, maybe that's just 0.2. Maybe that's a quarter of the size of position that we really want. So maybe we use that wider stop initially. And then another thing I've struggled with is adding positions. I've actually started forcing myself to add positions and just manage them, even if it's just to a break even, because a lot of people seem to struggle with that idea. But what if our initial MMRB was only a quarter of the size of position that we really want? So we're eager to find places to add to that position. And as we add to the position, we have to reduce the MMRB. Maybe it was even an ATR or a half an ATR or something at the beginning, but we just reduce our MMRB to maintain the same level of risk. And those are probably the key points that I took out of this lesson, and then my experiences in the ensuing weeks. I hope.
Yeah, let me share a screen here real quick. I wanted to talk a little. We got some time. I cannot minimize. Let's try that again. All right, blue circles. Okay, yeah. So let's see if I can make any annotation. Yeah, this was the image that came into my mind as we're, if I think about my core. Let me try that again. I don't want that. I want it blue. So suppose, I want this to be my, my core portfolio equity curve or something like that. And I've got some certain amount of open positions in the core at that moment. When I kind of zoom in on that part of the journey, my current state is I'm fully invested or whatever. To protect that wagon train, I'm thinking of the Trail Boss, the Outriders, and the Scouts. So I think of the thing I'm trying to protect and preserve is this guy, and maybe what I got to have is a scout out here who's giving me the early warning about things that are coming or circumstance. There's a bridge over here by a river that I have to cross, and so I've got to do something to get to that bridge. And maybe there's other environmental hazards, and there's things that I can do. If this was a military patrol, I got to have security out here. I have to have this much time so that if adverse price starts coming in at this boundary, I have that much time to be able to make the adjustments to establish defense. Because if I'm going to defend that, I can't be moving. So I've either got to reduce or hedge or something. So I got to have some trigger alert that gives me time to take special actions to preserve the wagons. And then maybe I got to have, so if this is the core, maybe I can have swing trades out here where I can start building a buffer. So if I get adverse action, I can turbo it when it's good. I can hedge it when it starts getting bad. And if it gets really bad, then I can just hunker in like a turtle. So I got to have some kind of scout that's riding around all the time, checking the lay of the land. And so in order for the long-term buy and holder guys, the good citizen farmers, I get this trading mentality is what's happening out here to act as a buffer against pain, but also as turbo when times are especially good. And maybe I can go out and forage and bring food back, so I'm not eating my supplies. To me, that whole trader mindset is concerned with all of the things like, hey kids, just sleep in the wagon, everything will be fine when we get to the land of milk and honey. Wake up in 30 years and your retirement will be fine if you just dollar cost average. But meanwhile, there's a whole lot of things going on around here that have some potential. So that I am constantly kind of watching. I got to have a scout mentality. I've got to have the core mentality. I got to have the swing or the adaptive mentality. And then I got to have the trail boss who's kind of responsible for the overall condition of the operation. What's the allocation there? In the same way in the Army, we have a support area where we do all our rest, refit, recovery, maintenance, staging supplies that have come in to get ready to push our logistics supplies out to the units that are doing the fighting. There's a tank company is engaged in fighting. And so I have to cycle food and ammo, and he sends back the empties and the recovery. So I got to have a support area back here that is configured to take supplies, get just what's needed up to the guy that's doing the fighting. Well, running that support area is crucial. And if I do that well, then I'm going to have an uninterrupted, continuous flow of supplies and logistics in both directions through my support area that enables this guy to conduct continuous operations. If I do this poorly, then there can come some times when he lacks the critical supplies and he has to stop. And when you stop, that's bad. So what that means is, the enemy's not dumb. That's our symbol for an enemy force. The enemy would rather blow us up than destroy tanks, because it's hard to kill these guys. It's easy to kill those guys. You have to get past them to get back here. So you can go around them, or you can try to sneak or whatever, or shoot them from a distance. So there's always a trade-off as we're running this support area. When I'm conducting resupply and maintenance and all that stuff, I want to be very efficient, like an industrial operation. I don't want anything wasted. So if I'm supporting, I have to balance that against protecting. And there's some balance point that says, what is the percent allocation of my effort? How many guys in the support area do I have doing work, and what percentage of guys do I have that are protecting our support area? If I go 100% support and 0% protection, if there's any risk, I get blown up and then I can't support very well. If I go 100% protection and 0% support, yeah, I'm protected, but now I'm not supporting the force and we fail. So there is sort of this constant risk-reward assessment or risk production assessment that says, what are the market conditions or what are the environmental conditions that tell me what the right amount of protection versus support ought to be? That's like the asset allocation model we might use and say, how much do I want to put on speculative growth versus solid growth at a reasonable price versus pure hedging? And there's another one in there too about solid assets to hold. It's not really a hedge, but solid asset defensive plays. I should probably put that as defensive plays. So there's about 4 positions that you could take where I'm really being aggressively speculative. I'm reasonably speculative based on returns. I'm defending the position with things like, say, utilities or real estate that should do well when these ones fail. And then hedging is where I'm really taking short-term plays to defend against tornadoes or bear markets, or maybe short the market or something. So deciding which one of those postures to be in is really what the trading mindset is concerned with, because we know that there is a seasonality to these things, and knowing where you are in the seasonality tells you what the appropriate posture might be. And then these things are not mutually exclusive. I might have something like 4 categories, and I might say, hey, my 100% of assets, A, B, C, and D, what's the percentage that I'm putting inside each bucket at this moment? Maybe I'm 80% growth, 10%, and no hedge. But maybe for the next 2 weeks, I got to go 10%, 30, 30, and 30 until we get through whatever earnings season or past the next Fed announcement. So this asset allocation is really the continuous running estimate of risk and reward of the trail boss with all of the tools at his disposals. Does he have core positions? Does he have swing systems? Does he have scouts that are out detecting for important possible turning points? Well, when I think of that, I'm actually thinking of, in one sense, when I talked about this on the weekend report, where I was looking at the regression line fractal framework. This is on dailies, and I'm looking at the 10, the 30, the 90, and the 270, and that gives me something like, the 270 gives me something like big seasonal moves. Where are we in that cycle for the long-term buy and holders? The 10 period, look how jaggedy, and that's how quickly their world is changing. And then the 90 is that happy balance in between those. That's the green line. And so that was a way to, in about less than a minute, is to quickly say, hey, this is why in the last 2 weeks you're down 6R. Because during this you were up how many R? If you're -6 in this region, but you were up, let's just say for argument, you were up 20 over a move of the same size, that when it was up from here to here, you were +20, and then in this move of equal size, you were only down 6, I would consider that to be a successful strategy. Now, could we do better? Well, sure, I suppose. Could we be concerned now about how to detect these turning points and these differences in market conditions? This is where that blended view of multiple time frames, but with standard lenses, will give you some insights. And so if your system is doing that, if that's good enough, then you're okay. But what you want to start looking for is now, are there ways I can start refining my understanding of these inflection points? And my spider sense right now is where we are is at an absolutely crucial gathering of the tribes. Because not only do you have the RL10 and the RL270, which just 2 weeks ago were at an extreme difference of opinion about fair value. Now suddenly the traders got spooked, and now the difference between those two is negligible. So for some bright shining moment, 436.50 is the perfect price. The owl confirmed that. Like, this might be your warning sign right there, is when the 30 crosses the 90. The 1030 might be your initial warning, confirmed by the 3090, and now it's official. You know, you get that alert right here, and you save probably that much losses in the RL10. And then the other thing that I would say is that if I'm concerned about the two extremes, the 30 confirms the move of the 10 when you get the RLXD. That's what happens here. And then the 90 is the front runner. This has just started to stabilize. It hasn't fallen yet, but any more falling from here, and this thing is going to roll over. And that will be a major turning point, because that thing does not turn trivially. When that turns, that lasts a period of time because of math. That's what made this one so important, because this 270 had turned, you had a double top, and it broke out. Huge. That kind of predicts this leg. But the very success of that leg says this. Now, we're right here. So this thing could fall that fast in 10 to 20 days. And we're back to 390. So So as I lay this out, I look at this as scenario 1, in which this holds and we get a return. Scenario 2 is that doesn't hold, and it comes down and tests this one and holds. Scenario 3 is this doesn't hold and you get this back to 390. And then scenario 4 says not only did this hold, but the previous peak, which was our target to the upside, doesn't resist, and you get the rosy scenario. That also kind of corresponds in my mind to the probabilities. You know, I have much more, I believe the buy on dip is probably there because there's a lot of people that are invested in this. And they know that the further they let this go, it starts getting bad in a hurry. So this is where that plunge protection team could start coming in and buying. Plus, just the fact that the RL270 is up says that some of that long-term money, which was investing in here, is ready to buy on a dip to protect their initial investment. Because maybe that was only a quarter of their initial pile. So maybe they're going to start adding in. So the most likely scenario to me is a buy on dip in a bull market. The second one is, oh no, you get a second leg, and then the next, it has to go through 2 to get to 3. So not only is that a probability, but if it gets to 3, there's 100% certainty it had a 2. But not every time that it goes to 2 does it go to 3. Because there will be an additional test down here, just like there's a test here. And sometimes it'll recover. Like the 10% sell-off from 460 is 400. That's a 10% sell-off. So where we are is the 5% sell-off. So that's why I say this is such an interesting moment. And then I just want you to notice how useful the rollover of the RL90 is. That is the health check of the next higher trend. So if I said the RL10 is the trader's price, and the RL270 is the long-term buy and hold fair value price, then the 30 is the health of the trend on this time frame. And because that's the black line, this thing has already rolled over. Oops, that should be black. This thing has rolled over. That's the owl wisdom is telling you, hey dude, batten your hatches. You should not be in unadulterated growth. You should be somewhere between growth at a reasonable price versus defensive plays. You should be kind of in that zone. And then the 90 is the health of the higher trend. And the fact that it has rolled over or is rolling over is your warning that the 270 is ready to protect whatever they have in this gain. They are ready to start protecting that. So that's why this is a really important test. So I would add that to your consideration for dynamic framing. In this case, what I'm doing is I'm doing dynamic market framing. because whatever this market is going to do is going to influence large caps, mid caps, small caps in the US and the globals. It's going to infect that entire Morningstar style box. It's going to affect US and the globals, all the other asset classes. So in point of fact, if depending on how nuanced your view of the market components and segmentation is, when you get that the RL10 has rolled over, the RL30 has rolled over, the RL90 has peaked, and the RL270 is coming into the station. This is a pretty significant condition to be in. You know, if I thin slice this now, because that's this moment in time, I have the two extremes have agreed, the traders and the position guys have agreed this is the fair value. The owl is warning that there is a significant risk to the downside, so you better have your hedge in. And the 90 has just said significant warning time. So I can integrate those four signals and now come up with a narrative. And now I can start scanning the sector for the things that should, when things are like this, what kind of things work best? Is it a time to really be super speculative? Or growth at a reasonable price? Or defensive plays? Or hedges? Or maybe pure short? I'm not sure I know the real difference between those. Maybe there is. It could be just taking the opposite of whatever position I want to hold on to. Maybe I'm just putting a play in here that makes that portfolio neutral. So that whatever I would expect to lose in those, I just offset with those. Whereas if I'm short, I'm really trying to actively make money. So now I want to have some sense of what are the members of my population so that I have real choices in all of those categories, so that as I get indicators that tell me conditions of the market are changing, I can operationalize that by making trade frames that make sense inside that context. So that's what I mean by dynamic framing. So that's everything I wanted to talk about today. And the meds are running through me again, so I have to put this one in, wind this up. Let me also, while I'm here, I meant to, Lou had offered this, a quick one. He was looking at Clark's and he asked me to check his frame. So having just dynamically framed this, I would say, here's his plan. I can see that what he's got here is a kind of a kata 2 with a couple days up. It's coming out of that doji. I like that. He's going to use, I think, the 2-bar low. He's going to take this breakout. Now, what I would say is a pure doji frame would be like that. But he's on 30 minutes, so that's fine. So he's waiting for a mechanical frame, mechanical breakout of the high of the day. The next target would be here. He's got 1, 2. That's good. He's got if that works, he's got catastrophic success for 3 and 4. He's got a reasonable 5, 6 for that target. That's perfect. What he needs to consider is Would I take this short? Would I take that short? I would absolutely take that short. I might take that short if the market was also weak. But I think he's looking at adding a second position here at the 2-hour battle drill. So I pronounce this thing solid and sound once you answer these questions. You don't have to take those, but you should at least be aware of them. He's got that nice turning point identified, so there's room for a tactical trade of 2R up to here. If it got through here, you would expect this thing to turn back into the summer. So that's what I would say. Good looking frame. All right, that's everything I got. Jeff, anything else? Any final comments? Greg, any final comments?
No, I'm great. Thanks for the discussion. It's been
Thank
really
you, Ken.
informative.
Yeah. Okay. All right, guys. We'll take good care. Have a good, safe rest of the day, and we'll see you in the chat room and whatnot Monday. Take care.
Thank you.